see Bitcoin is pushing and is going up. Right now it's at 81.4K. We're going to talk about what I think is about to happen next here with Bitcoin, whether or not this is a fake rally. But anyways, remember, I'm not a financial advisor. None of this is financial advice. Let's get straight into it. Like I said before, Bitcoin is doing numbers, up 3.5% in the last 7 days. So it's been doing decent. It's been doing a decent 11% in the last 30 days. Right now we're still trading around our our bear flag here, but we haven't necessarily broken too far past it. We are above the bull flag or the bear flag. As you can see back here, bear flags are supposed to be bearish. You know, these are supposed to be bearish patterns, but we're breaking out to the upside of this bear flag, right? Now we do have our 200-day moving average right here. I was talking about this in the last video, and it looks like we're about to try to break past it again. We got rejected at that level once. Let's see if we get rejected a second time. We also have our 50-day simple moving average down here, and this is going to act as support for us, right? So as we broke back down and we were about to go back into our bear flag, we actually had that recovery right there. So that was actually pretty good, pretty big. And then you can see on the percent R trend exhaustion, it did what it did before, and the short-term trend only went halfway down, and the long-term trend didn't go down far either, and they both recovered swiftly. So if this does what it did last time, and we see the long-term trend continue to push up, which is looking like it's doing, and then the short-term trend continuing to push up, which it was looking like it's doing, then we're going to end up seeing a nice breakout to the upside and probably a strong push towards 88K, right? There's a possibility that we can see a quick, strong move upwards if we get past this 200-day moving average. Like if we get past the 200-day moving average, we are going to see 88K pretty quickly, right? So we'll have to see if that's possible. And then when you look over here at the MACD, you see some buying pressure building up. Let's see if it's enough buying pressure to push this up higher. All the other times, the buying pressure was strong. There is a lot of buying pressure all these other times. So there's a possibility that we get strong buying pressure again, right? And again, if we see strong buying pressure, then we can come up here to 88K. Now, I know a lot of you are probably thinking, well, Marcellus, you were bearish the whole time. Now it's breaking out. Yeah, I'm still bearish here, but this is how bull traps work. This is how bull traps work, right? And look, the way that these institutional investors, all these big whales, billionaires inside of Bitcoin, the way that they're doing this, they're liquidating people on both sides. Like they're literally trapping the bears right now. Like all the people that thought that were about to get rejected at this bear flag, because this is a bearish pattern, everybody that thought that we're going to get rejected and continue down this level, they got all trapped. So all the bears got trapped. So not only did bears get trapped and bears got liquidated, now you're seeing that they trapped some bulls up here. They trapped the bulls up here, and I'm sure some people got liquidated as it dropped. And now it's about to try to pass that level again. So they're literally trapping people left and right. I would not trust anything happening in the market right now. Anything could happen. I'm still bearish on the market. And right now, I don't trust the market. This could easily pull back, right? This could easily have both the long-term and short-term trend pulling back, doing something like this and then pulling back. And it can also easily continue to break out. But remember, we do have financial information coming out this week that's pretty important. We have the inflation rate, the year-over-year inflation rates coming out. And then they're going to make their interest rate decision. And then they have their PPI, the month-over-month PPI, coming out on the 13th, and the inflation rate is coming out on the 12th, and then we have the PPI coming out on the 13th. So those are pretty important to the price of Bitcoin and the stock market and everything else. So that's going to be very important for us to wait and see. And then on the daily chart here, you can see we're still pushing up to our 200-day moving average. Honestly, if I were to just look at the daily chart, I would be like, okay, this might be a real pump, right? But it all depends on whether or not it can get above this 200-day moving average and staying above it. If it can get above this 200-day moving average and stay above it, that is bullish. Now the MACD shows that we are starting to weaken here with buying pressure, buying pressure is starting to get a little weaker. And I was talking about the divergence here. And I was talking about this on my other video because lower highs on the MACD and higher highs on the chart is bearish divergence, right? And then what do you see here? Lower highs on the MACD, and this the new lower high. And then we are getting higher highs on the chart. So that's bearish divergence. So that's why I'm still saying that I'm still bearish here. I still think that it's a bearish time right now, but it's looking like it wants to blow past it. That's why I'm saying that this is market manipulation. Like we're literally bearish and it's just pumping. But it's how market manipulation works. Now, if I have to talk about purely the percent R trend exhaustion on the daily chart, what kind of strikes me here is that whenever we have this long-term trend, this blue line pumping up here towards the top, it's usually always bullish, right? Because as the long-term trend goes up, this is going to push the price up significantly. The short-term trend is what it is, right? It's a short-term trend. But if the long-term trend is staying bullish, that's a good sign that it is bullish, right? And now we're also seeing the short-term trend is not just dumping down, right? The short-term trend is literally waiting for the long-term trend as this slowly but surely comes up. So there's a possibility that we can see some higher levels, 84K, possibly 88K. We'll see. But yeah, that's kind of what it's looking like. But still, we have bearish divergence on the MACD on the daily chart. So that this is what is kind of tripping people up, right? And then if you also look here at the weekly chart, this is what is making me continue to say, yes, I'm bearish, right? Because for one, on this chart here, first we're going to take off all the drawings. And what you'll see here, the red line, that is the 50-day simple moving average on the weekly chart. And then we have the 200-day moving average here on the weekly chart as well. Something that you're going to notice if you look back at our previous bear market, there was actually one time where we hit and retested that 200-day moving average, right? And that is equivalent to this level right here, right? Because this is what we did. We almost touched it. But then you come back here, you see we did touch it once here. But we didn't touch it until we were ready to break out, right? And this is going to make sense in a second here. And then when you come and look at the last bear market, not the last one, the one before the last one in 2018, you see we retested the 200-day moving average here. We retested it again here and the 50-day. And I believe that's also what they call the def cross. And then we retested it again here before we broke out. So this is a first time retest of the 200-day moving average, right? Because we haven't tested it. We almost tested it right there, but we just got rejected. And now you're seeing that we're testing it again. So the reason why I'm talking about this is because I think that there is going to be another pullback here. Some people might think I'm wrong, and hey, maybe I think it might push a little past the 200-day moving average and then pull back, right? Like a quick wick upwards, possibly to 84 to 88K, like I was saying, and then a big push down. Also, when you look at the weekly charts, percent R trend exhaustion, I talk about this a lot. Whenever we get that intersection there, usually it starts to continue downwards, right? Like it starts to act like it's going to continue to go up, and then it has a rejection. So that's really what I'm waiting for right now. I'm waiting for that rejection. And then again, on the weekly chart, we are building bullish divergence on the weekly chart. And look, bullish divergence is higher lows on the MACD and lower lows on the chart, right? Higher lows on the MACD and lower lows on the chart. So what do you see here? This low and this low equals higher low. A new one is going to be printed around here. And then we're going to continue to create the higher lows until what? About the end of the year, right? So we're seeing the higher lows on the MACD till about the end of the year. We'll be creating these higher lows. And then going into next year, that's when the true bull market starts, right? So we're probably going to see something like that happening. And the reason why I'm mentioning this, again, higher lows on the MACD and lower lows on the chart, right? Because that's what bullish divergence is. So when you pull up the chart, you're like, we don't have lower lows on the chart. Maybe that's because we haven't bottomed out on the chart yet. Maybe it's because we haven't bottomed out on the weekly chart because we were creating lower lows. We were creating lower lows, right? But we just had a massive breakout. So if we break down again, we may go lower than 60K, right? And then that'll be the next lower low on the chart. And then we'll be printing out new higher lows on the MACD. So that's something that you got to watch out for and pay attention to because we are building bullish divergence. We are building it, but it doesn't mean we're going to take off right now. Remember, higher lows on the MACD, lower lows on the chart. So as we print out those higher lows on the MACD, it's almost like it's ahead of the charts, right? The MACD is almost like ahead of the charts. So as we're printing those higher lows on the MACD, we will be creating lower lows on the chart, right? So we should have another pullback, right? Another pullback below 60K. Technically, if we're talking pure technicals, pure technical analysis. So anyone who's saying, oh, you're wrong, like, no, I'm not wrong. Like, this is actually how bullish divergence works, right? This is the actual trading patterns. This is actually divergence, right? So I'm not wrong about any of this, but again, the market, literally whatever these billionaires want the market to do, it's going to do that. So if they want it to take off right now, it's going to take off. If they want it to break down, it's going to break down. But technically, it should be breaking down right now. So if you start seeing it's taking off, it's because they're trying to trap the bears first a little bit more, liquidate the bears a little more as it goes up to 88K. And then when it hits 88K, after they have trapped the bears, now they're going to trap the bulls. And then they're going to liquidate the bulls on the way down. This is how they do it. Literally, this is how they do it. But anyways, let's talk about what some other people are saying here. Crypto Rover says Bitcoin is expensive again. I'd much rather buy in the likely bottom zone. So here is what they're showing here. Extremely unlikely, likely, unlikely, all that other stuff. Right now, it's showing that we're in that expensive zone. So, I mean, for what it is, I've seen other people do charts like this, and theirs look slightly different. So I don't really care about the very expensive, likely bottom zone. Like, I don't know how technical it is, right? I don't know how correct it is. Now, over here, this guy, Riker, he says, how can we tell if a Bitcoin breakout is real or fake? Now, the other guy was bearish, right? But this guy here, he says, when Bitcoin accumulates within a pattern for about 60 to 90 days, it usually breaks out. If Bitcoin breaks out of the pattern and the crowd is skeptical and no one mentions the pattern, then the pattern has a very high success rate. Whether a Bitcoin breakout is real or fake depends on the crowd's psychology. If the crowd believes in the pattern, it's likely a fake breakout. If the crowd doesn't believe in the pattern and trades against the trend of the pattern, it's likely the pattern will be completed. So if you kind of look at this, yeah, we have bearish signals here, right? It should break down. It is a bearish signal because, for one, we have rising wedge forming, and we also have the bear flag, right? The bear flag and the rising wedge are almost one and the same, right? So, this he's kind of right, but like, it's like, do you really think it's going to have a massive breakout? And that's kind of what he's alluding to here. He's like, yeah, it's about to have a massive breakout. That's what this guy is saying. So technically, and this is again, like, if you really read between the lines, he's pretty much saying technically it should go down, but fundamentally, things are starting to heat up here, because look, he said if Bitcoin breaks out of the pattern and the crowd is skeptical and no one mentions the pattern, then the pattern has a very high success rate. And we're breaking out of the pattern now, and no one's talking about anything bearish. Like, everybody is bullish right now, and they're literally ignoring the bear flag. Like, we have a rising wedge and a bear flag, and they're ignoring it almost as if it doesn't exist, and they know exactly what happened last time. But this time, you can see it actually succeeded in breaking out above the bear flag. So yeah, that's real confusing. But yeah, this guy might be right. It might be bullish right now, or might be bullish. This guy says Bitcoin is preparing the biggest trap. Now we got another bear. Says, just look at the chart below. Market is pumping hard without any clear bullish catalyst. Massive liquidity pools left behind. Retail thinks a new bull run has started. So yeah, he's saying that the market is pumping hard without any clear bullish catalyst. So yeah, that's true. It is. It is. And massive liquidity pulls left behind. And yeah, a lot of retail buyers are like, hey, this is the new bull run, the bull run starting. So it could be a trap. And that's why I'm still standing on the bearish narrative. Like, even though I said that it could quite possibly break to 84 to 89K, I don't think, even if it does, I don't think that it will hold that level. I think if we break out, we either get rejected at 88K, right? Well, 84K, 88K, or wherever our 50-day moving average is going to be by the time that happens on the weekly chart. All right. So we'll see. We'll see what happens there with that. Then he says, we've already seen something similar set up twice over the past year, October 1st to November 2025. Price made a fake out, followed by a 36% drop. And then he said over here, so he just gives a bunch of different scenarios. And then if you look at it here, these are the scenarios that he's mentioning. But the fake out number 3 has broke out higher than the other two. So I don't know. That's where things get confusing here because it looks strong. It looks stronger than it should be. All right. And then this person over here says, unpopular opinion. I don't think Bitcoin's lowest point was 60K. I completely agree with that. And then he says Bitcoin rising wedge. Yep, Bitcoin is inside of a bear flag slash rising wedge. Bear flag slash rising wedge. I don't care what nobody says. This is a bear flag slash rising wedge. Anybody who says otherwise does not know how to do technical analysis, unfortunately. Right. And more so a bear flag than a rising wedge. Because you see, this is the bear flag. This is the rising wedge down here. So when you look at this that he has here, yeah, that's a bear flag. But when you do it, or I mean, yeah, that's a rising wedge. But when you do it this way, when you take it all the way from back there all the way up to there, then you see the actual bear flag. So yeah, he just didn't draw it out fully. But yeah, it is a bear flag, 100%. But anyways, this is all I got for you guys today. I'm gonna keep you guys updated on Bitcoin, and I'll let you guys know exactly what I believe is happening next. But yeah, this buying pressure is just getting weak. This buying pressure is getting weak. This is bearish divergence. I don't care what nobody says. This is bearish divergence right here. We should get a breakdown. We should be getting a breakdown, but obviously price manipulation, they're literally manipulating the prices. Like, we should be pulling back right now as I'm speaking. But yep, this is all I got. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. And leave a comment in the comment section. Let me know what you guys think. As always, I'll be back with another video.